gentlemen of the universe, this is Sergeant Pepper's Lonely Trends with Friends, coming to you live from our new studio, New York, Irving Place, one of my favorite parts of town, Gramercy Park. If all things go right, who gave me this hat? We have props. If everything goes right, we'll be doing a lot more shows in the same room. Phil
Captain
didn't
Sully
drive in.
Howard landing
Michael
in
Parekh on somebody's left. How are you supposed to do it when you're in the sound? On my left, you're right. Michael Parekh, the AI whisperer. How many years at Goldman Sachs?
20 plus.
20 years at Goldman Sachs. By the way, Goldman Sachs says a recession is coming.
45%.
Oh, they're saying 45%? That's not a big percent. They're not going on the
60%
limb.
of JP Morgan. It depends. There's a
60%
spread.
JP Morgan. In the t-shirt, just he couldn't make it into the room. He couldn't make it into town today because what? The F train?
I'll be there tomorrow.
F
I'll be
train?
there tomorrow.
I
got like landscaping shit going on.
Oh, do you? I'll
Yeah.
tell you what, yesterday I did something different. I did the 4-5 train down to Wall Street. See my friends over at Webull that just went public. Just have a celebratory drink with those guys. They snuck out through a SPAC. And then I had to take the 2-3 train back up to Soho. So I usually just go 6 train. That's about that's the extent of my New Yorkness. Just got to, so I don't get on the wrong train. 6. But yesterday I did 4, 5, 2, 3, and I somehow got lost on the 3 train. And then to my right, Tom Bruni, who knows trains. Tom Bruni runs community and content at Stocktwits for a long time, and master market reader. You and Phil go way back, and Phil Perlman over in the corner wearing a T-shirt today. That's a gold.
I'm giving a little shout out to my boys at Rec Shares. GDXU is a 3 times gold miners exchange traded product. If you're if you're a DGen trading gold, you might want to take a look. They got GDXU, GDXD. I'm a shareholder in the company, and but I'm just wearing the shirt. They sent me the shirt. I'm just wearing it. I'm not. This isn't a sponsor. This isn't. And they're my boys. So
Yeah,
just giving them a little love.
This phone's from Apple. The
not
exactly
one, not made in India, not assembled in
and
India.
These are Moscow glasses, and then my sunglasses are by Garrett Light. By the way, Garrett Light. Once you, I love this brand. They're in Soho. All right, not paying me. All right, let's get into it. First things first. Next week we're going to take a break, but we have a long interview. I have a long interview with Vlad Tenev, co-founder and CEO of eToro. So that'll be next week's Trends with Friends. We dive deep into the future, betting, talk a little bit about how the company got started. But it's my first long interview with Vlad in years.
CEO of where?
Robinhood. Did I say that?
Okay. You said eToro.
Did I?
Yeah.
Oh,
little Freudian slip.
We may have to redo that. Vlad Tenev. I got him on Panic with Fred. I mean, I got him on Trent. You know what? Can someone bring scotch? Because I'm fucking this up. Might as well just drink scotch.
That's right, Howard. We're just live.
And bring me a line of fethanol.
You could go on like a 2-day bender starting right now.
And who's going to tell Ellen? That's a new show that I'm working on. We sketched out today is where I do stupid stuff and someone has to break the news to Ellen. Phil, how good would that show be?
That's a pretty good one.
Yeah.
Because you've done some stupid things and,
And I was stupid enough to volunteer to tell her.
Hey, and how did that underwear end up in my bed? Which intern put the ladies' underwear in my bed is another show. All right. So, well, we've lost all our sponsors very quickly. So Cashtag awards tomorrow. If you want, we're sold out, but there's like general. I got to pitch this. Fucking, I just talked to Francis Ellis. Very baby blue eyes there, Fran. Pull the eyes back up on Francis Ellis. I just caught that. Holy smokes, I'm in love. I'm in love. So Francis Ellis, who is employed by Dave Portnoy, he gets fired and rehired every week. Cashtag Awards tomorrow night at the Stand. I will be doing a bits. We have some hilarious videos and cameos. We have Francis, who I think is a great comic, Harvard guy, Look at those baby blues. He's the lead comic. What's the name of the other comic who's just going to tear people's hearts out tomorrow in the audience? So it's a great comedy club down the street in Union Square. Booze, uh, Naked Lady Teas, and I'd like to thank eToro. Yoni's in town. The CEO of eToro is in town from Tel Aviv. Vlad, special appearances by other CEOs in the fintech space. Van Eck will be by, but more importantly, the community. All the award winners are there to collect gifts. We've got incredible gifts from Ari Soho, which is down the street on West Broadway. He put together a degenerate economy kit of really a new fabric for the winners. A great travel bag. We call it the Degenerate Economy Travel Kit. He's an incredible fashion designer, and he loves. Oh, there he is, and just been a really good friend of mine for a long time. And we talk about. I hang out in a store all the time. We talk about markets, and we talk about Israel, and we talk about everything, politics, and we're throwing an event there tonight. But he put together a kit for all our winners. We've got LA Golf, Bryson DeChambeau's company, with putters and drivers for our winners, which is, I think it's maybe the best golfer in the world eventually, other than Rory, and wanted to change the game. Entrepreneur, designed his own golf company with a friend of mine, Reed Dickens, and he's playing his clubs, right? He's built and is playing his clubs. And Manscape is giving away the chairman and some ball cream to everybody in the room. So everybody's going to have fresh balls. Let Bryson's clapping for that. And then we have Como's Tequila as well. So like the Academy Awards, the winners are just going to get like really cool shit. And Phil may get a clean T-shirt, and then he'll promote it on the show. And if you're going to give Phil a T-shirt, that's how cheap you are. You'll be sold for a T-shirt. Me, it takes tequila and LA Golf and other things, Phil, but God bless you.
I just like a good T-shirt, man. You know what I mean? Like, I got no problem with that. Not only that, but you just busted my balls for giving a shout out to Rec Shares, and then you spent for like 2 seconds, and then you spend the next 10 minutes shouting out everybody.
These people are giving us stuff. Rec Shares giving us squat. Now, I love the Rec Shares guys are going to be in the room.
There you go. Look at that.
And the degenerate economy. Feed mayo to the tuna. Give people what they want. What can I say? Degenerate economy. But these guys invented a lot of the stuff, and they're good people. These products are not for me. Okay, so enough of me, because I have nothing left to say. But Cashtag Awards, if you're in the city and you want to have fun, we are sold out in the club, but there's 300 people that can see it on and have drinks on us just go to cashtag.stocktwits.com and get yourself a ticket for like $60 and come hang out with us. I think we got like 50 or 60 spots left, but it'll be fun. All right. Phil, I think I've covered everything, boys, in the production room. Phil, what are we going to talk about today?
Let's do it. So it's great to have Tom here, and we're going to do some of his charts. It's a huge earnings week. We're going to talk about that. But we're going to start with the most interesting chart in the world, and I think we have 2 of them. But these are really just giving a visual data display of the decline already that we're seeing in the trade with China. And, maybe we're not seeing this in the market. Maybe we never will. Maybe it'll be over tomorrow. But there are specific, this is really happening. We are really seeing a drop off. This first one that we're looking at here is the first one, container ship count, departures from China to the U.S. So we're seeing a big drop about a month after the Trump comments in the Rose Garden when he showed that little plaque with all the different tariffs, used capacity and total capacity.
Yeah, I think one interesting point here, if you look at I think we're going back to early 2024, The average is, we're kind of around a midline where it would expect to be, but I think what's getting people's attention is the rate of change, right? We saw, the tonnage ramp up February, March, April as people were trying to get ahead of the tariffs. And now, because of the additional uncertainty, we're seeing that they're not being rolled back. You're seeing a sharp decline and people just putting stuff on hold. So I think this is the uncertainty that a lot of the companies during earnings season are referencing. They can't make decisions, and we're seeing it in kind of the, transportation sector.
The one thing I would add is that it says stop at the end of that the earlier slide, and it's a full stop. One thing we don't appreciate, this is going to be at least 30 to 60 days to unravel. In other words, if tomorrow there's a deal and Trump says, everything's off the table, I was just kidding, or I won, and so on, it's going to take at least 60 days to even get the engineering back up for the shipping. But more importantly, the manufacturing, if you look at the details on that, a lot of the companies in China have already laid off tons of people, and here. And so to hire all them back, it's 6 months.
Yeah.
So this one is very different than other situations like this. And I don't think that's absorbed by the market yet.
It can't be. I mean, I'm a price person, right? Anybody chiming in on macro here, I immediately distrust because we haven't seen this, right? So you go to rate of change. Okay. So there's all these experts. You can only go to the prices, and we'll get to the prices next, which is what the S&P is doing, right? But the complete sudden stop, as Michael says, people's behavior has not been factored in, which Phil, you should chime in on, is like, I think people are in denial of what an empty. Well, we've seen it in drugstores. If you go into any drugstore these days that's failing or on the verge of failing, it looks like Russia. I don't think people are used to seeing that at a Target or a Walmart. And I'm not saying it's going to happen because I don't shop at these places. But when I shop at a drugstore, it makes me feel sad when I see a failing retail store, when I see goods behind plastic, and I got to click a button to get an attendant. That's not America. We've gotten used to that. Because I was at a CVS here buying a Manscaper that I lost. Someone stole my Manscaper, which is not a good decision. Someone stealing Howard's Manscaper. I mean, that's dangerous. But to go buy one at a CVS in Manhattan is like, am I in America? So I don't think we're used to that.
No, and we're not used to it at a Costco and a Sam's.
That, yeah.
And I mean, in other words, CVS, the drugstores we expect, but Walmart, those places in regular America. Not the cities. We're in New York. We're used
I'm
to
regular America. I think if you have to shop at a Costco, you've made bad decisions. So I don't think
Costco.
that's regular
That's
America.
where I buy all my gold.
Okay, that we're on a tangent, but yeah, Phil, behaviorally, what are people not seeing yet? And
okay, so here's the thing.
We've had the V. No one expected the V. We had VIX 60. We were buyers of VIX 60 in this room. We were like, guys, if you're going to buy stocks, you could be wrong, but you buy VIX 60. Now we're at VIX 20. And people seem to be, you got Elon telling you, or the sharing the news, the earnings are worse than ever. The stock's higher than it was a month ago. We're back to the Lutnick level of Tesla, where they were on Fox News, spent a day selling Tesla. So we're back at that price, which is, didn't think that would happen so fast. I got to be honest. So what's the behavior setup here?
Well, here's how I see it. First off, we have no idea what's going to happen. So the market could be interpreting where we are right now perfectly. Like it could be a fair price for the risk and for the potential earnings in the future, or however they, that is a possibility. That said, the collective mind of the market, like all the participants collectively, oscillate away from and towards reality, right? So there's like this reality delusion scale. And as as investors collectively, like one investor, two investor, all the way out to how many investors there are, all added up and divided by that number, we oscillate. And sometimes we are like dead on in reality. And sometimes we're completely fucking delusional, like March 2000. February 2000. And we're going to look at a chart later about the financial crisis that alludes to this as well. And so we have no idea where we are. From my point of view, I look at, what Goldman's saying. I look at what, some of the different pundits are saying about the severity of the situation. And we look at a chart like this one, the tonnage one especially. And to Tom's point, the rate of change here in this chart. And by the way, the difference in the seasonality from last year. So, February, we got a bottom last year. February, we got a bottom this year. And then we started moving up through the third quarter. Now we start moving up and then boom, we break down. And I don't know if last year was a prototypical seasonal pattern, but we're seeing a change from that. And so that kind of data is cause for concern for me. And I know it's a little bit of a cop out to say we have no idea what's going to happen. I know, but when I use my own eyes and I look at reality and I see the possibility of this extreme drop off in global trade as represented by the largest two traders in the world and their relationship, it is, it's concerning to me. And I don't think the man on the street is going to feel it until they really feel it, until they see empty shelves, until they see prices going up. And if we see that, then we could, then we have a real problem, obviously. Yes, Michael.
Go ahead, Mike.
This chart obviously talks about China, US, but as I said last show, also don't forget the 10% tariff on every country in the world. And Trump literally said, and I'm negotiating with 200 countries. Nobody's raised their hand and said, yeah, we're negotiating, right? So the point is that 10%, that is not reflected in this chart. And that's another piece that we need to be thinking about. Automobiles, agricultural products, just across the board. And that is another layer on this that we absolutely need to keep in mind.
Well, the other layer is Trump himself, right? We don't know what he's going to do next. So anybody that says they know what he's going to do is either got inside information, which there's a few people that do, or a liar. And so I think, Phil, to defend how we think about the markets here as a group on the show is we believe in the Buffett kind of philosophy, and your philosophy is to stay. The trick of the market is to get you out of the market. We believe at Trends with Friends to be in the market. And so I agree with you 99%, but I think the way philosophically this show, and you and I have talked for decades about this, is there are a few times a year, like VIX 60, like March, when I started Panic with Friends, where I will not pound the table, because that's a fun term, where I say you have to zig when others are zagging. Meaning there's a once or twice a year where picking up nickels in front of a steamroller or whatever you want to call it is the right mathematical thing to do in America. I'm not talking about Russia, but where the rules have been the rules. In the Warren Buffett theme of things, when you play back the tape from a few weeks ago and what we were talking about, it was like, hey, it's not pretty, but historically, if you buy a VIX 60 or VIX 40, you are going to make money. Therefore, you have to do the opposite. You have to stay invested. The idea is to stay as close to invested to your risk profile allows, and then bite it, eat it, embrace the volatility of VIX 60, because when it happens, that's how you beat the market. The only way to beat the market is to as few times as possible zig when other people are zagging. And if you did that in a couple weeks ago, and even if you added 10 or 12% extra exposure, you've made an extra you've made your year. You can just index the rest of the year, and the worst you're going to do is 4% better than the S&P. And you dream for those moments. So people need to realize that Trends with Friends is about staying in the market overall. And then when these moments show up, be prepared to take some risk. It's never pleasant to take risk, but you don't want to take risk when there is no edge. And we are back, I think what you're saying, Phil, is we're back to like, if you know, you're cheating, because right here, if we pull up the charts next, no one knows.
Yeah. So, Keith, I think if you pull up the last chart, the S&P 500 from Hostile Charts, but before we get into that, I think, to Howard's point, we're seeing anecdotally and in the data that retail investors are staying invested during this period.
Yeah.
I think it was eToro that did a survey. They said 75% of their user base either made no decisions or were buying stocks. VOO just became the biggest ETF by assets under management. So we're continuing to see this long-term buy the dip behavior. Where we're seeing that divergence is what active traders who are trading individual stocks on Stocktwits are seeing versus the broader trend of, hey, dollar cost averaging into your 401k. The labor market's still strong. People have jobs. They have money coming in. So there's this kind of underlying bid that will not go away because of the mechanisms of kind of the labor market.
And I know what I told my wife and daughter is we use Frack, and it's a portfolio company of ours. And I remember telling them on tariff day, I was like, get ready, put some money in your Freck account. They didn't want to because because they don't follow the market. They said, is that right? Because they look at the news and they're very happy they did. Now, I would also say here that I took some off, meaning, again, I'll trade around the edges. I'd rather panic when everybody stops panicking. Now, I just don't know what's going to happen next, but historically, over time, we're going to move up. I think Trump flinched, whatever we're going to call the world. He's an asshole and he does whatever he wants, but I think he heard the yelling, he heard the screaming. And I don't think that changes in his China tone because that was probably the original idea. But, and so we don't know the damage there, and that's the container stuff. But I think around the rest of the world, we know. And let's be honest, yesterday was a huge day in Canada because my old country is a fucking mess. And he got a liberal elected. He literally got a liberal elected. He got that Trudeau idiot reelected, wrapped in a suit this time, but he got the same crazy policies that were wrecking Canada. And I have to agree on the left and the wreck. No, I don't agree with the far left in America. So you basically now have a border country. Our biggest border has got the exact same policies, maybe worse, under a new person. And I don't know how the market doesn't even understand Canada. We want to take over Canada, yet we know nothing about it because the market hasn't even blinked. And we have the same government there. Like, I don't even know how to analyze that because Americans are just ignoring this.
They already think it's a state. I mean,
yeah. And to be honest, that's the way I look as someone who crossed the border to go into Buffalo. Whenever I look at Canada as I was always American, like they don't fight us, but Canadians now have flipped. They look at the United States very differently. I haven't lived there in 40 years. They look at the United States very differently, and Canada's a much different place than when I left 40 years ago. As much it was a multicultural place, it is a seriously it's a different country in terms of their immigration.
And their sense of self and respect was pricked in a big way, and that is what is the reaction here. Australia, which we don't want to make a 52nd straight, is about to do their elections in 2 weeks.
Yeah.
And there too, Peter Dutton, who's the Pierre, the conservative, is down in the polls.
Yeah.
It's so the
It's
one
flipped.
thing the whole world is flipping. What this is showing the whole world is this is what could happen if you take what you have for granted.
Yeah.
And they're reacting. So the catalyst, and that's an important element that we didn't have prior to April.
I have
Liberation Day.
never, my texts have lit up today from friends in Toronto who are like, what the, I think they saw the polls. They have Poly Market there. They have Kalshi or whatever. I don't think Canadians thought that this was going to happen. I have Canadian friends that are like, what the fuck? I go, do you not reading Poly Market? Like this, we could do a poll on Stocktwits. They knew he was going to win. It was a fucking landslide. Mm-hmm. And this was like not even in the market. Anyway.
Hey, Howie, what do you think? What do you think of the EWC here, the Canadian ETF? Because I mean, it's only like it's yawning, by the way, today, and it's only like 2% off its all-time high.
Well, remember, right? It's a very natural resource-full country, and that doesn't change much. Their lumber is still their lumber for now until we take it. Well, David Sachs, he plans to take it, and Chamath will sell it at a loss, but still make a profit for himself. But the point here is that Americans just don't treat it as its own country because these trade agreements have been so long in motion. So I really feel for the unintended consequences. The unintended consequences of Trump's mouth, we're going to start seeing for a very long time this time because he thinks he has an agenda that was handed to him by God. And so we'll see. So the market, I think, is the most important chart. I think the China thing's cool, but like Tom's chart and the chart that's being passed around tells you the mood right here, the battle that's going on right here. And I don't have an idea which way this goes. And I think the first move could be a fake move.
Okay, so Tom, go ahead, take it away.
Yeah, Keith, let's bring up this chart from Hostile Charts. Larry Thompson, great guy. Follow him on Stocktwits, tune into his show. How's that for a plug? Anyway, basically what he's looking at now is basically prices in the S&P 500 getting back to that gap during the initial kind of tariff announcement. So we had that huge flush. We were down 14-ish, 15-ish% in a couple days. And then we've had this somewhat of a V bottom where investors are trying to figure out, okay, is this real or do we take some off the table and look for further downside? And I think, what Larry is showing here is, from a short-term trader perspective, we've got the 5-day EMA. Prices are above that for now. And so if you're a short-term trader, you're looking for longs. You're not looking to fade this. So I think it comes down to time frame, right? You're starting to see day by day things improve for the bulls. But I think this is a key level. I think we're at 550-ish or so on the SPY. A lot of traders are going to be using that as a point of reference, anchored to that kind of initial tariff day from a month or two ago.
I like it.
And then Phil, I know you brought a great chart of the S&P 500 from 2007, 2008. So what's the thinking here?
Yeah. So listen, I'm not saying I'm bearish here. I'm saying I have no idea what's going on, and I'm just being honest. However, over the last week, we're getting a lot of like a lot of new bullishness among technicians. The Zweig Breadth Thrust has really sort of been the biggest one. Everybody's talking about that. And I'm just presenting another side to this. That's all. But I recall, and this is what came to my mind as we've been battling back, and we've made up in the S&Ps. We've made up like half of the correction we've made up. And one of the things that came to mind was at the beginning of the financial crisis. And so this chart is from 2007, 2008, 2009. There was a minute in July of 2007 where the financial system was beginning to buckle, and the state of the collective investor was shock, but also disbelief. Couldn't quite wrap their head around what was happening, and the market sold off 10%. So that little circle there, that's a 10% correction in the S&P. And then it battled all the way back, barely made a new high a couple months later, and then the crash began. And so I'm not saying this is what's happening now, but I'm saying if we're entertaining scenarios, one possible scenario that is an alternative to the Zweig Breadth Thrust scenario where, okay, we bottom, V-bottom, now we're going to make new highs and move on with the bull market, is that we battle back here, internals deteriorate, and we make a new high or we double top, and then we feel the effects of whatever this, nobody knows, but whatever this tariff mess is going to look like.
Yeah. In leaning back, watching Twitter and Stocktwits rather than participating much the last few days is very polarized. People just can't get it out of their heads that the world's ending and we don't understand the China thing. And then there's those people that are like, Trump will fix this. So that makes me even more unsure of like what wouldn't surprise me is nothing happens here for a while. And we just, the volatility shrinks a little bit while we figure this out.
Yeah, and I think, sorry, Keith, if you can keep that chart up, I think an interesting thing that technicians like Larry or myself will be looking for is, within this V rally, what is the upside participation that we're seeing, right? So we, got a couple breadth thrusts here, but the amount of stocks above their 200-day moving average, which is a quick hand way of saying, are they in an uptrend or are they in a downtrend? It's still in the 20 or 30% range.
Really?
You need to see a
Low.
lot more stocks get back above that 200-day moving average in order for us to have a real bull market. So people are going to be looking for upside participation. To use Phil's analogy, 0708, it was financials that did not participate in that last leg higher. They were showing relative weakness. They were rolling over quickly after that rally and leading to the downside. I think in this case, given how tech heavy the S&P and NASDAQ are, you're going to want to watch semis. You're going to want to watch any of these AI plays, Mag 7. If they don't catch a bid and they don't start leading to the upside, that could potentially be the equivalent of financials leading to the downside in 2007, 2008.
Yeah, go ahead.
No, I just wanted to point out, I love this chart because there are two major pictures here. One, the big crash that we all know in 2008, Bear Stearns,
Yeah.
Lehman.
It's
But the
amazing how
fir-
much I've forgotten.
But the
just
first
looking
one,
at
which
this.
is the circle,
Yeah.
that was a credit thing that we've totally forgotten.
I don't remember. Yeah.
That was BNP. There was a whole bunch of like hedge funds, the contagion risk. That was a huge thing that we've totally forgotten.
I'm
We've
saying I
conflated the
forgot.
two.
Mhm.
And what I'm getting at is, just like we say, this is Smoot-Hawley 2.0, which was 1930. It took 5 or 6 years. So these things can go on for multiple years
Yeah.
on an up or a down trend. And what we are talking about may be a small part of the story in a year or so. We don't know yet.
We don't know.
There's a lot of unknowns here.
lot of unknowns. I think it's woken Trump up to that he can't do everything. He doesn't even understand. He's never looked at the bond market in his life. I mean, just it's really amazing how simple they think, right? Like I call it the kerplunk economy, and he just is. He thinks he has the right to pull everything out and go, look, ma. And I think the market's going to fight back and say, fuck you. And we'll see what he does. Like he's not a patient guy.
And-
So
Well, don't you think he's getting calls from people like Jamie Dimon
patient.
and
Yeah.
like, hey, Donald, dude, this is potentially pretty fucked
It's
up. what
easier
you're
for
doing.
them to reach him, as I said, by going on Fox, right? So Fox, for the first time, is inviting those people because it's good for ratings. They would never have Jamie Dimon on, but because they're worried, like Fox News is worried if they have Jamie Dimon on because that's their way to, even though supposedly people have Trump's phone number from the Atlantic and he picks up the phone supposedly, Jamie's not going to call fucking Donald Trump because he'll go on Fox, he'll look in the screen and go, and he hopes Trump's watching TV. And Fox knows this too. That's why Trump's pissed at Fox. Why do you think Trump's pissed at Fox? Because they had the nerve to put Jamie Dimon on, and he wasn't expecting to see Jamie Dimon come and call him an idiot on Fox News, right? Like we're gonna pay for that. And like there's so many people so confident, and he's literally watching TV and making policy based on who talk last. And
That's right.
it's very simple stuff. Like go look at the Kerplunk game. You played it as a kid. It's very two-dimensional the way Trump thinks. He's like, what happens if I pull this out? And nothing happens. He pulls out the next one. And anyways,
It also
Tom, what else you
depends-
got for us?
it
Tom, we
also
got
depends on
earnings,
the-
Apple, what's going on there? Whoever you got.
Yeah, before we get into earnings, I would just say it also depends on the day, right? His temperament is changing, with the wind. So we had Amazon out this morning basically saying, "Hey, we're going to put, some sort of notification in your cart to say
Which
that
a lot
there's
of retailers doing.
What are they-
Fabletics
what are
did
they
it a
doing?
couple of-
What are they
they're
doing?
basically putting a tariff charge in
A
their
line
cart
item.
to indicate to consumers, hey, this is why your price is going up. And I forget what Trump responded this morning, but he called it like an act of terror or something.
A political act.
Yeah, a political act. So,
And this was their press secretary, Levitt, said that.
so we're seeing that.
oh, wait a minute. They're saying that Amazon's politicizing this?
Correct. The
But
press
this
secretary said
Bezos
this
deserves
is,
this. They went and kissed the ring and
They
then
did.
realized that kissing the fucking ring is not, because who's paying for this if you pull up the small caps, you know what's not bouncing? Small caps. You know what really isn't bouncing? Companies with 5 to 10 million in sales that can't get out of
Mhm.
China. So, fuck Bezos, because The Washington Post gave them carte blanche.
Amazon is going to
they're
have to
still
put,
posting Hamas's numbers for deaths. So
every retailer
it is
online is
political.
going to have to not only put a tariff surcharge line in about a week or two, they're going to have to put up a line that says this product is not in stock because of the tariffs.
Yeah.
We just can't get it. They're going to
Yeah.
have to explain it because customers are going to be livid when
Good
they
point.
can't get their bounty or whatever it is, and it's not there
Yeah.
in the sizes they want.
Tell you what, it's helped me because the tariff has cut my writing by 20%, and my numbers are going up. People want to hear from me less. It's very interesting data.
Yeah, I mean, my broader point is like he's missing the signal, which is Amazon saying, "Hey, this is impacting consumers. Consumers are not happy." And again, he's just looking at this makes me look bad. This
Bad.
makes our policy look bad, and reacting to that. So, if Amazon's doing it, every other retailer is doing it, and like you said, the small businesses are the ones that are going to hurt most, which is why we see the small cap index still down. I think 20-25%.
And believe me, most speculators are in small caps. I see it on Stocktwits. I've seen it for 100 years. They could be talking about Apple, but they own small caps. So I know it. I've seen it. I can't trick me. I know how people think. Phil and I have been doing this for 20 years on Stocktwits and Twitter. We know what it sounds like. We've seen the All In podcast. They talk out of one side of the mouth and then do the others. There's a big difference when regular people do it and rich people do it. The regular people are in small caps. They're in small cap biotechs. They're in small banks. They like to speculate. They're in the hymns of the world. They're in, sure, they grab a Palantir and they grab a Robinhood and they get stuff right. But generally, they speculate in small caps, and they've been trounced, and I can tell that's happening. Do we have problem with the show? Are we troubleshooting?
No, we're good.
Okay.
Yeah.
Next, do we have any few more charts? And I'll
Yeah,
tell you,
let's.
pull up
Tom,
Antitrust,
earnings.
pull up Deckers, for example, just quickly if we can. You'll see retailers are fucking annihilate. Deckers is hardly bounced.
Yeah,
This is
Deckers.
a great American company.
On holdings, like basically any of these high growth ones. Keith, you can just go to a chart. Yeah, that one's perfect. So
Okay.
starting with earnings, earnings are going to set the tone for the rest of the year. People are looking for what companies are saying, what executives are doing, how they're planning to deal with all this uncertainty. So this chart here shows that this is the busiest week for earnings. We've got Apple, Amazon, Microsoft. So it's showing, roughly 22 or 23 trillion dollars worth of market cap is reporting this week. So to say it's an important week is kind of understating it. So the next chart shows so far companies are being punished more than usual for earnings misses. And the reason for that is they're focused, investors are focused mostly on guidance. So what happened in the last quarter isn't really that important. But if you miss last quarter and we have more uncertainty and more challenges, chances are you're going to miss again in this quarter. And so we're seeing a lot of downward revisions from both analysts and individual companies. But yeah, right now it's important to know, like, even if you're betting on a beat from a company that you own, the market is not rewarding that beat. It's paying only attention to forward guidance because it wants to know, all right, great. You hit the Q1 numbers, what's going to happen Q2, second half of this year.
And the market expects guidance. But what happens in a quarter when most companies start to say no guidance because of the uncertainty?
Have you ever seen that?
No, that's what I'm saying.
Goldman, do you remember seeing this?
No, never. This not COVID. I mean, yes, briefly, maybe.
COVID.
For,
well, we were all on the same page.
But
we knew,
but that was that was if the whole world was in it, etc.
Yeah.
So you normalize the whole world.
Yeah.
Here it's the U.S. inflicted. We've put sanctions on ourselves, and no one's been through there. And so even Google and Microsoft, I listen to the call. You listen to them, and there's a confidence level that this will continue because we're spending $75 billion. Google said. But what happens when 20-30% of their customers are basically have to cut spending in a quarter or two, and that affects everything?
Yeah.
And that's not in these stocks and markets.
Like I said, anybody who has edge right here is cheating, right? And there's a lot of cheating going on. VIX 60, I didn't have to have an edge. I've seen it enough times. I wasn't happy about having to go in there and buy because it just was an unknown at the time because it was really different this time. But you do it. there's no pattern for this type of behavior right here. We've had the bounce. We've seen some weird stuff like Tesla gave you what you thought, a terrible number, and they're much higher than they are. So I don't have a read.
But remember, on Tesla, there was a manufactured bump as well. Sean Duffy, Transportation, just literally a week ago said, "Oh yeah, we're talking about lowering regulation on auto
Good
driving."
point.
Okay, that bumped everybody up. Waymo, Google, everybody. But the reality is, the self-driving is not ready. His robotaxi promise
Yeah.
is at least another 2 years away.
And Waymo's gone from is exponential growth. They were 5 months ago. They were 50,000 rides a month, or some now they're 250,000. Again, tiny numbers,
And numbers.
but we are talking exponential growth. And I just this is what's so exciting about the world is if I made one bet in this country based on what insurance companies are and how humans are, that we would never see a self-driving car. So I am blown away that I ride my bike next to Waymo's in an era where I never thought I'd even see it in my lifetime. So that is the good news, is that technology persists. I think the bad news is the policies are horrific right now. All right, next chart. There's some good charts, but
Yeah.
this is a big week.
Yeah, I think Keith, next one's in the slide deck, just kind of showing the resetting of expectations. So this is Citi's earnings revision index. This is looking at what analysts are saying.
Okay.
And so as you can see, we're seeing the most downward revision since COVID. So, and then the next chart.
But in a way, that's good because everybody's negative.
Well, yeah, I mean, we're kind of kitchen sinking it, right?
Yeah.
Like if you have any bad news, you're putting it out now so that if things are slightly better than expected, you can get a rally in Q2, Q3.
And that's what I said last week. You can read Ben Hunt's amazing piece, but understand that doesn't mean that's the trade. You should understand how markets work, but this is another lesson on how markets work. The earnings revisions come fast, right? Because they just, when they change their mind, when they finally take their 80 pages of that they had to write on the other side of this and have to flip, they flip fast. And so you see there the rate of change is actually helpful.
Yeah.
Because now they're getting ahead to protect their jobs and saying the end of the world is coming. So you can't get too negative because the world quickly factors in the negative view. But I'm not saying that's, it's just at least this is how they react, right? Mike, you were on the side. You're used to this. They probably had meetings about this type of stuff. And guys, fix your numbers. They fix their numbers overnight. They're heartless.
No, the research directors at my former firm, they're talking to every analyst. They're asking them every day, every week to update bottom up numbers and so on. And they're facing the same. Those analysts are facing the same issues we are.
Mm-hmm.
They don't have visibility. They don't. The guidance is getting murky.
They knew Trump was getting elected, and it was a tariff guy in November of 24.
There you go.
No revisions. No revisions. They were marking it up before this takedown. So again, this actually helps you in an extreme. They were useless when Trump got elected. Now you either bet with them or I would bet against them. But again, we just do not know.
Most sell side, because I used to run a piece of that. Most sell side analysts, they don't look beyond a quarter or two. They can't.
They can't. That's why you have these spikes.
Yeah, and I guess the point here is if you're a trader, right, you want to know the direction of where these analysts are trending, because if they're still kind of in the process of revising stuff down, right, that's going to impact the stock. So you got to be aware of it.
But one more thing. If we look at this chart, and Tom, if you remember, we bring this up in next quarter, and we see another revision or two down, I would get, based on, even if Trump's, this would be a positive.
Yeah.
Meaning, as fast as these guys move, if they get surprised again, you cannot imagine what the panic will be like, right? It'll be end of the world. We'll see a spike that we haven't even seen. If this goes on one more quarter, we will hit all-time lows in the Citi earnings revision index, and we will be in a recession, and we will be screaming end of the world. So this is why I can't believe people are super bullish right here until they reveal one more card. I think we need to reveal another card or two.
Take this discussion down to the one company we've talked about, Tesla. Just look at what happened, right? Almost every bullish analyst cut their price targets by 20, 30, 40%, yet they kept it overweight, Dan Ives, etc., because they want to basically believe the story beyond the next 1 or 2 quarters,
Mhm.
and they don't want to accept what happens in 4 to 6 quarters. That's the toughest thing for a sell side analyst, and for that matter, a buy side analyst, because their portfolio manager is going to kill them,
Yeah.
because they're saying you're going to kill my next quarter results. Don't
Yeah.
do it.
Yeah.
And so there are those games being played.
I think one trick I could show you guys, a stock I watch, which is the LVMH of America. It's obviously a toned down LVMH because it's an American version of LVMH, is Deckers. And if we could pull up the chart, you should really see that if this company's struggling in retail, it says a lot more than like Target struggling. This has been, go look at the
Yeah,
year,
look
go,
at this is massive.
but go look at this company over 20 years. Okay. This is a monumental breakdown in what's happening around the world. This is an American brand that has done a great job. We've got Trump talking. Can we not get ad free on our own site? So we've got a 20-year trend of a company that's executed flawlessly. So people say, oh, it didn't happen. The tariffs haven't had an effect. This is what they should be watching, not Apple and Tesla. If this company can't figure it out, you should be scared. And there has been no bounce in this company. I'm not saying buy or sell this, but if you're not watching this right now to see how they report their own Uggs, they've been buying tremendously. They bought that hookah shoe brand.
Mm-hmm.
This company is an American great company. It's not Apple. This is a distribution acquisition genius of an organization, and the stock's been cut in half and no one's talking about it. And again, market cap may not be big enough. What's the market cap on this?
16.5 billion.
Okay, but again, this is what
But
Trump doesn't care about. He can't get a meeting. Maybe they can get a meeting, but David Sachs and fucking all these assholes can't get a meeting for Deckers. And this is what America wants. This is the products that they want. And Deckers knows this. They are dialed into the American consumer. And it's a train wreck, this company. And again, no one cares. It's $8 billion has been wiped away. That's fucking not even the net worth of the people that just joined the $500,000 club in Washington, D.C. But you know who's going to be pissed? Fucking the people that buy their products. When the prices go up 40% on their fucking Uggs. All right.
I'll tell you what, man, the Clifton 10 just came out. Hoka Clifton 10. That is a great running shoe. It's a great walking shoe. I'm going to pick up a pair today. I may pick up 2 pairs just because I don't want to pay, I'm going to pay $150. I don't want to pay $300. So maybe I pick up 2 pairs.
That may be our best tip of the show. 90% of people don't know that Deckers is a company in public. And the 90% of people that own it probably don't know that Hoka is a company that they bought for like $10 million. This is an American genius company. And we just went out and wrecked it for no reason. And America shops with these products. They're going to be pissed. Okay.
Everyone knows about iPhones and how much they could cost. But
and
no
Apple can get a meeting with fucking
Yeah.
Trump and go cut a deal. Deckers can't.
Jensen is meeting with Trump on Wednesday.
Yeah.
Along with other CEOs.
Yeah.
Last week after our last program, I got an email from a guy who was pissed at you, Howard, for always being against Trump and that whole Chamath crew.
Yeah.
And I just want to say, and you're busting on him now. But I just want to say, first of all, you're one person being honest. Secondly, you were just earlier in the program, for you who's watching, who sent me that email. I don't remember your name. It was a cordial email. I really appreciated it. Had a lot of insights. But I just want to say that earlier in the program, he was busting on the left too. So he's equal opportunity guy. This is not a partisan thing. This is the incompetence and corruptness in government in general. It's not like you're a super left. It's not like you're you using they and them for your pronouns. It's like, it's just honest analysis and criticism. Okay, Tom Brunei, Apple this week, other big companies this week. What's sort of on tap in terms of what we should be looking out for, company specific, aside from Deckers?
Yeah, I think Apple's going to be the big one. Obviously, they're trying to figure out their whole supply chain issues. They're trying to shift over to India, but they're having some issues getting, their technology and their processes out of China. So I'd be curious to get Michael's thoughts here. Like, how are they going to guide in this? It's also been 4 or 5 quarters, right? We haven't, 3 or 4 years where we've not had a like strong iPhone upgrade cycle. So you've already got a business where, hardware margins are compressing or flat, and now you've got these tariffs to deal with. So, how is Apple gonna, navigate this type of situation?
First of all, who's going to buy an iPatel? Okay, no one's buying an iPatel. So will they change the name?
I think that's a good name. We should
The
put it up.
iPatel.
Yeah.
Well, I mean, they got to change the name. Made in India. All right. The iRishi. All right.
No, I like iPatel.
iPatel is a winner. All right.
So, no, the big issue, Apple is trying to move heaven and earth, obviously, trying to get as many iPhones assembled, not made in India. We need to keep that in mind. They're bringing parts, they're bringing machinery, etc. Chinese government is already cutting that off at the knees. They're cutting off the moving of equipment into India, so that's going to slow down. Apple's saying, okay, with the Trump tariffs, etc., we will every iPhone that comes into the US, we're going to assemble them in India. They can barely maybe do it. Even there, we don't know if the pricing would be what they would prefer without these tariffs. And my bet would be it'll probably go up a little bit. So they're in a very, very tough spot because the tariffs, the one thing we don't talk about, the tariffs are not just on imports. The tariffs are on all the machinery, all the equipment that comes to make the things here, the factories. And so, and that's why it's affecting the auto companies, it's in electronics, anything. If I want to make a rubber ducky here, I can't get the molds made here because I don't have the machinery. It's in China. And if I import the machinery, that's another 150%. I'm not going to be able to make the rubber duckies or the shoes
or the Vestaboards. I had my good friend from Vestaboards, Canadian guy who built this company. That you can't make it anywhere else. I get it, but you can't make it anywhere else. There's no saving the company.
I mean, David Sachs or somebody should say, hey, we're going to tell Trump to basically take off the tariffs, not just the 10% and 140. We're going to take off the tariffs on anything that you need equipment-wise to make this stuff. That would be a reasonable response to what they're trying to do. But they're not thinking that
they're
far.
Setting up clubs to get access to Trump. That's what they're doing right now.
That's all.
Read between the lines. Trump will pick up his phone. Therefore, let's set up a club, $500,000 a year for those people that know us, and we can get you in line. This is SoftBank 2.0, but oligarchier. They've replaced SoftBank with a group of 20 VCs, not to be named, okay, that says, come through us, $500,000 club. They just got outed. They have private WhatsApp chats that they're all fighting in. Groups. And so what they said is, you can't have it for free. They're literally doing it in plain sight and telling you what they're doing. I'm not saying I'm against it or for it. I'm just telling you they're doing it. And if you think you can beat them, you are a fucking idiot. They have set up their own pipe into the White House. What's the name used to walk around, Phil? Remember we would watch CNBC with the indicator, the briefcase indicator from, and we all hated CNBC because we all had to watch CNBC and see Alan Greenspan, how heavy his fucking briefcase was going to be. You know what we have now? A club. And you know what's getting pitched into the club? Hello, could you help me get my nuclear or my energy deal in front of the president? Oh, this is a really good deal. We're going to put in $500,000 in the Series B. And then we will walk you into the president once number company 65231, Donald Trump Jr., SPV, David Sachs, Chamath, Elon, SPV, and it'll make its way into the White House. And meanwhile, those that can't play the game, again, this has been going on forever. This is just a new packaging on an old scam that these fucking guys are doing on Twitter and in plain daylight. There's no other reason they would do this. They're fucking doing it. And then they have idiot creeps emailing Phil, Phil, for anybody that's emailing you, just understand that there's 1,000 people pinging me that don't have the nerve to say thank you for calling these guys out. So for every polite email you get, I'm getting 1,000 texts from people that don't have the nerve to say thank you, Howard, for calling it out the way it is. And so the point is not whether we're right or wrong. The point is it's happening. This is literally obvious. Why would you set up a club for $500,000 if there weren't perks? The perk isn't to meet David Sachs. He doesn't even know how to talk to his children. So the perk isn't fucking that. The perk is how quickly do you need to get in front of the White House? Chamath said it the other day. He goes, I used to give millions to Obama, and I couldn't get them to pick up the phone.
Said it right there.
He said it to a comedian, and then he goes, but now I get somebody to pick up the phone. I'm like, you just explained the fucking problem. The only difference is you were once poor and worked at Burger King, and all you're now proud about is that you have a direct line to the king. That's not democracy. That's democracy for Chamath. So I get it. Democracy is working really well for rich guys that kiss the ring. For Deckers, 16 billion, it's not fucking working well right now. And for their customers, that's my point. And for everybody who wants to flame me for calling it out, please do, because you need to get woke to what the hell's happening.
And we've claimed American exceptionalism in terms of our capitalism system, and we've been right for 70 years because we have the largest economy. But the whole system works because it's capitalism organically bottom up, not through appointment. And that is the thing that everyone is accepting. And by the way, you know which countries did it by appointment? The Soviet Union, India,
Argentina, which now isn't.
It was all by appointment. India is still half by appointment.
Yep.
6 families, 8 families by appointment. I'll call it out.
Yeah.
Well, but that's not how capitalism works.
Meaning
the real one.
The chance of me getting in front of these guys is zero because I don't want to be in front of them. What I worry about as a VC is that they get in front of my company after I've already invested and put a gun to the founder's head and say, just like SoftBank did, if you don't take the president's $20 million, DJT or the son or whatever, Josh, or whoever it is, again, it's just obvious. I don't know who. Then we're going to give it to your competitor. Okay. Now, SoftBank and Tiger and fucking T. Rowe Price, they were all doing this. And it wasn't really illegal. It was just, if you don't take our money, we're giving it to competitor. Now that money's coming with an appointment to the president. So it's not in the same industry they did. It's nuclear. It'll be crypto. And it's unbelievable that it made its way from Silicon Valley to the White House. This is inside information. Again, they're taking risks because it doesn't mean the company is going to work. So it's a little different than like public company insider information. But we're seeing a decaying of how our organic system works, where things could bubble up to the top, and it's going to be brutal. I think it's going to be brutal.
It's like SoftBank, but oligarchier. I think that was the line of the show right there. Howie, beautiful. I just have one thing I just want to add.
We're going to do AI, no, or we don't have time?
Well, we did a little bit, but let's cover one really quickly. Yeah. I mean, there's a few issues that are popping up. The Apple one is, sort of the most out there. Or sort of the most obvious. But the Google Meta one, I think, is really fascinating because you're not hearing that much about it, but it could have huge consequences. And I'm talking about like antitrust cases and all that, maybe reminiscent of Microsoft in the 90s, I guess. Michael, your take here.
No, I mean, antitrust is going under the radar because of all these other things. And this period is extraordinary again, because in the 90s, we had Microsoft being hammered by antitrust against Netscape and so on. This time we have at least 2, maybe 4 to 5 of the Mag 7s that are all in the crosshairs. And Meta right now is up front. Google is obviously, they've lost antitrust, not 1, but 2 cases that are going the remedies phase. All of this will take a while to sort out. And we're not even talking about the European stuff that's going on, where there are fines now against Meta and Apple, as an example. And the point here is that every time historically, and I did a post on this, these things happen, it gives obvious advantages to the new companies, the OpenAIs, et cetera, and that is going on. But the overlay, because of all the things we've talked about for most of the hour, the underlying assumption through every tech wave for anyone who's done anything in tech is that because of Moore's law, et cetera, tech prices go down.
Yes.
And that is, at this point, when I look at it at a bottom-up basis, there is nothing that I can see that goes into the input elements of the Mag 7s, even a Meta. There's nothing that's going down in my view. Even if tomorrow Trump says, "Oh, you know what? I was just kidding." With 0 on everything, because that is going to affect higher prices for the next year to 2 years. Which means because of a market that focuses on a quarter by quarter, the multiples on the Mag 7, I think there's a higher probability that the average multiple is down rather than up. Not a stock recommendation.
No, but I agree with you.
That's
Jeff
that's the
Richards brought
assessment that
that
I would do
yesterday.
in my old job as a sell side analyst,
Yes.
running.
No,
internet
public
research.
markets are going to do better than private markets
Yeah.
here. And I say that as a private market investor mostly, but I don't fish where the fish they are. I've given up to those people. They're going to play their game. They're going to win their game. Smart VCs have to play a different game.
Correct.
Okay. Don't know. Again, it's a different game. But the public markets excite me because, like the revision, they happen much faster. Like Jeff Richards was on last year. It's like software companies are trading at 5 times sales. Okay. Maybe they're not growing as fast, so they can continue to drop, but at least we're in the ballpark of like what's a company worth, right? But until I see Deckers in a company that's executed for 20 years, until I see companies that have just had their business shut off, figure this out, it's not figured out yet.
No, that's
So
why.
all these people with so much confidence, they don't care about these $8 billion companies, but that used to be a big company before tech. And I don't think people understand that America's built on not just the Magnificent Seven. That's a fun consumer layer on top of the real world that we all get to know each other and make fun of each other and be in touch with each other. That's not America. That's a layer that Microsoft and everybody built. It's productivity, it's great. But the real underpinnings, the containers, the city revisions, those things are going in the wrong direction.
Wrong direction.
Doesn't mean that they haven't overshot. But like people betting that like FANG is the world have really lost count. Now, the other great news about AI is Sam Altman could give a fuck what these guys are doing. He got above the layer, right? Like Elon's pissed. Sam executed. I mean, I'm not a fan, but like he can go buy 100 companies with that stock.
I
so
got
he could save America.
One thing I'll say on AI that's different this tech cycle versus others, everyone keeps forgetting this, and Sam has warned us. AI is a variable cost business, meaning more people use it, it costs more.
Yeah.
And guess what? Every input on the semiconductors, infrastructure, etc., is going up, or not being available. That's the other thing. The machinery is not being available, right? And we haven't programmed that in. So the Sam's high class problem is he has demand up the kazoo, but he cannot serve it because he can't light up the servers.
But he has a currency too.
He has a currency, but when you can't even get the cooling systems, the memory from all these companies, because of what I was talking about, the manufacturing equipment is now surcharged 30. The companies can't make them fast enough, and everyone else, Canada, etc., they're cutting deals around the U.S. to get that as well in those countries. So there's a lot of rejiggling.
We're gonna hate the man, just like we hate the oligarchs right now, but we need him right now. It's weird because he's above the clouds. He needs to go. He's going to go buy apps. Them and the cyber companies are going to do acquisitions, which is we don't have that.
They have a great currency.
Well, they better use it wisely.
Yeah,
and often, because that's the only thing that's going to save a lot of smaller businesses, because they're not going to be able to get oxygen without OpenAI giving them oxygen.
And the one thing I'll just say on the antitrust stuff, again, we've talked a lot about it on the show. I still think all of the companies, the big ones that we're talking about, they need to proactively do spin-offs, get ahead of the department, DOJ, etc.
Yeah,
if they can take so much heat off by doing self-announced spin-offs, even if they spin off 5%, 10% in this market, Google, Meta, etc., everybody.
YouTube will be the best news this market could have. If Google says, listen, we're making a standalone business and they will pay us, meaning instead of running as an OpEx, go run it yourself and pay Google. If Google's a good enough product for you to use, great. But if OpenAI is a better product to make YouTube better, go. Like we are getting screwed by Google. And as a shareholder, I'm at wit's end because I can't get the value of this company. Like if Google should use Perplex, and if YouTube wants to buy OpenAI, wouldn't that be interesting?
That would be amazing.
So at 700 billion, YouTube could probably buy it for 300 billion, and now we'd have a game. So we are getting screwed by what people think we're not getting screwed by. And if we want to play the best game in the world, we need some people taking some risk right now, because we are getting oligarched up the fucking yin yang while we're not looking, man. And it's not good for America. And if you're not watching small caps, you're not watching America. And I'm not a small cap guy, but if you're not rooting for small caps right now, or understanding the damage to small caps, they've underperformed for long enough. If we can't support small caps, we've got no public markets. And that's not good.
Okay, I got a quick last word. Thursday is, correct me if I'm wrong, but it's Amazon earnings and it's Apple earnings. But much more importantly than that, it's the first day of May. And with that, we have this great weather in the Northeast. We have a disproportionate amount of people who are watching this who are in the New York area, New York, add Chicago to that or whatever. May starts and it's beautiful out. So I just want to say GTFO, get the fuck outside. Okay. Get the fuck outside. It's gorgeous out. You only live once. We're all going to die. Get out in the sun, get some sun on your face, get some vitamin D, move your body, enjoy your goddamn self.
All right. Good to see you
Okay.
guys live.
Phil.
Adios. I'll see you guys tomorrow.
All right, everybody. Trends with Friends. Thanks for tuning in. Thanks, eToro. Cashtag awards tomorrow. See you, everybody, tomorrow.
It was great.
Adios.
See you there.
What's that?
Live. Awesome.
Yeah, it's always better live.